Hello everyone. This is the pre-market report video for today, 3rd Jan 2024 for the Indian stock market in terms of Nifty and Bank Nifty. First, quickly let's see what happened in US. Yesterday, during European market, UK's second largest bank, Barclays, downgraded their rating on Apple stock to underweight from equal weight. They said they don't think Apple's multiple expansion strategy is sustainable, and also they are expecting Apple to post weak results for next some quarters, citing the iPhone sales drop as a reason. We know Apple is the largest company in the world and they are index heavyweight. In addition, during the long weekend, Citi analysts expressed their concerns that due to this emergence of individual streaming like Disney and Paramount etc., Netflix might already lost around $5 billion worth of streaming in 2023. So both these negative news made their respective stock to lose over 3%. In case of Boeing, it also dropped over 3% as Goldman Sachs removed Boeing from their conviction list. All these three stocks were index heavyweight, especially Apple and Netflix in Nasdaq. And this spilled over to other tech stocks. Hence, there was a huge pressure in Nasdaq last night. Then, around 9:45 a.m. Eastern Time, US manufacturing PMI data for December month was released. It contracted more than previously estimated. And also this coming Friday, very important non-farm payroll data is due. For that, analysts predicted they expect new job addition number will be around just 1,63,000, whereas on November month it was around 2 lakhs. So the manufacturing contraction and the sudden drop of jobs number increases the concerns of slowdown and made sure both S&P 500 and Nasdaq to close negative. Sector-wise, healthcare and energy stocks supported. Both of them increased over 1%, whereas IT whole sector dropped 2.6% and it did reflected on Nasdaq as it dropped near 250 points. In the end, Dow Jones closed flat to positive, whereas S&P 500 down by 0.57% and Nasdaq crashed 1.63%. In case of VIX, it increased 6% and moved from below 12.5 to above 13. Then coming about oil. Earlier yesterday, again there was an issue in the Red Sea, which in turn increases the oil price. However, later in the evening, Iran sent their navy to calm the issue, which erased all the oil price gain, and on top of that, it dropped further 1.5%. At the time of this video, Brent crude is trading at $76 per barrel and WTI crude is at $70.5 per barrel. Regarding Indian ADR, banks just traded in line with respect to Indian market, whereas for IT stocks, Nasdaq negative was transferred. Both Infosys and Wipro closed more negative than Indian market. At present, both got at least 1% negative arbitrage difference. About GIFT Nifty, today early morning it closed at 21,716. Yesterday evening, while Indian market closing, the premium was exactly 100 points, which is good since we got 20 more days to GIFT Nifty expiry. Here, 100 points premium means it's still indicating the upward trend. If it drops to 70 or below today means, then from that itself we can say the momentum is turned. Anyway, based on the 100 points premium, at present it's indicating another 30 to 50 points gap down opening. So those were the things happened in the global market. Now let's look at the India related info. We know yesterday there was a huge negative pressure in Indian market. The negativity was mainly started by this truck driver strike in 4 states, Rajasthan, Madhya Pradesh, Maharashtra and Punjab, against the new penal code law, and also against over 2,000 petrol pumps in those 4 states were running dry. On top of that, profit booking in IT stocks, the bad auto sales data and the L&T contract lost 19,000 crore rupees of worth to BHEL, pushed the Nifty all the way down to low of 21,555, 200 points down, and in the second half it recovered 125 points as Reliance improves. Auto sales data we already discussed yesterday. Regarding IT, we know last quarter none of the big Indian IT company posted a good results. Despite that, from November onwards, due to the expectation from AI, IT sector increased around 20%. Now, next week on Jan 11th, both TCS and Infosys is going to release their quarterly results. So it's obvious till that time we can expect the similar kind of profit booking here and there. Moving on about institution, it looks DIA was the black sheep. Yesterday, the net sold for 1,960 crore rupees, whereas FII net bought for 1,600 crore rupees. Then second, about banks, there is a positive news and also a negative news. First, positive news, Yesterday in the aftermarket hours, famous investment firm Jefferies released the statement that they think Indian Bank's valuation is reasonable for the credit growth of 15%. In fact, the actual credit is growing above 18%. We know and we discussed multiple times in the channel about Jefferies' influence in Indian market, so we can consider this as positive. However, on the negative side, I don't know why every day RBI is releasing some new framework. So far, they have released a recent new framework. Most of its objective is related to efficient banking operation. However, yesterday's one was directly related to stock market. Yesterday they gave the eligibility criteria and guidelines for how much dividends from the profit that the banks can pay to their investors as the dividend payout ratio. If required, please pause and have a look. Now, as per the new guidelines, banks can pay maximum of only 50% of the profit as dividend. And even that 50%, it's based on their 3 years history of net NPA. For example, if the net NPA is 0, then they are allowed to pay all 50% of profit. If the net NPA is above 6%, then they are not at all allowed to pay any dividends. In between, it's a linear interpolation. Personally, I consider this as negative. Let's see how market is reacting to both the news. Finally, today Supreme Court is going to release the judgment on Adani Hindenburg issue. So based upon the judgment, we can expect the influence on Adani stock price. As a summary, US market closed negative, but there is no indication of momentum reversal. IT area negativity and the Gift Nifty early morning drop together indicating the gap down opening of between 30 to 70 points. However, let's say if Indian government got the compromise with this lorry strike, or this Jefferies statement possibly might provide some support on the positive side. As per stock open interest, Bata India, Aker Motors, IEX, AU Small Finance Bank, Federal Bank, ICICI Bank and Ashok Leyland got an increase in open interest along with a negative close indicates the short build up. On the other hand, Delta Corp, About India, Tata Consumer Product, Dr. Reddy's Lab, Lupin and Divi's Lab got an increase in open interest with a positive price close indicating the long build up. About the things to look out, first at 10:30 am, Indian manufacturing PMI data is due and at 2:30 pm, Germany's unemployment rate is scheduled to release. Finally, in the night, another agency, ISM manufacturing PMI data, number of available job openings and very important, Fed FOMC meeting minutes are the things we need to keep an eye out today. Coming to technical, as we discussed yesterday, for most part of the time, Nifty was under pressure. As an intraday, it lost near 200 points and recovered 125 points. Hence, on the daily chart, it forms a short bearish candle with a long lower shadow. Here, since this candle is formed in the uptrend, this is also called hanging man pattern. The psychology behind this is, in the uptrend, buyers were in market control, but on the day the hanging man formed means, for the first time, sellers took the control. And also for the first time in the last 8 trading sessions, Nifty closed below the prior day's low, both indicating a pause or potentially possible reversal in the uptrend. In addition, the momentum indicators turned negative and hence we can expect a negative divergence and consolidation. So the expected trading range of Nifty is 21,350 to 21,800, and as long as Nifty is below 21,750, it favors the negative trend. However, a clear breakout above 21,750 could shift the sentiment in favor of the buyers. Psychological support is at 21,500 in the lower end. Then in case of Bank Nifty in daily chart, it also formed a long bearish candlestick pattern with lower high and lower low formation for third consecutive session in a row. So in order to resume the upward trend and to regain the positive momentum, Bank Nifty needs to have a breakout above the resistance at 48,300. Till that time, it also favors the sellers. The immediate support is at 47,600, which coinciding with its 20-day moving average. A decisive breach below this level could intensify the downward momentum. On the weekly options front, the maximum call option open interest was at 21,800 strike, followed by 21,700 and 22,000 with meaningful new call writing at similar strikes. Thus, from the options data, 21,700 to 21,800 can be the immediate resistance. Whereas on the put side, the maximum open interest was at 21,000 strike, followed by 21,500 and 21,600 strikes, with new put option writing at 21,500 strike and then at 21,300 and 21,000. Hence, the immediate support is at 21,500 to 21,300 levels. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any decision based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.